Good morning and welcome to the Killik & Co market update. There's been a lot of talk about political tension this week following the new sanctions that the US has imposed on Russia and also following the suspected chemical attack in Syria. Somewhat surprisingly, markets have held up fairly well so far. We haven't seen a significant fall in share prices, so that perhaps suggests that investors are not concerned, or perhaps more likely it suggests that investors are unwilling to sell shares, given that markets have already come down a fair amount this year. Now let's take a look at these Russian sanctions. They are quite unusual in that they're focused on particular individuals rather than specific products or exports, as we saw with the North Korean sanctions last year. So these Russian sanctions focus on 17 Russian oligarchs and the businesses that they own or control. So US nationals are no longer allowed to own shares in these companies, so they're being forced to sell. And furthermore, these companies are no longer allowed to transact in dollars, so that will make it virtually impossible for them to do business on global markets. So unsurprisingly, the prices of these particular companies have come down quite significantly. One example is EN Plus. That's a Russian company involved in metals and mining, particularly aluminium. And the price of that stock has come down over 50% in the last week. We've also seen a big fall in the Russian ruble. That's down about 10% versus the US dollar. We've also seen a fall in the wider Russian stock market. So the Russian RTS, which is the main Russian index, that's down about 9% over the last week. So as investors, we need to look out for any retaliation by Russia, and we also need to look for any impacts spreading over into the rest of the markets. And already we've seen some concern about supply shortages of certain metals. I mentioned aluminium earlier. We've already seen a spike in the price of that over the last week, so we will have to keep a close eye on the impact of this over the rest of the market. And then we have the situation in Syria. Western leaders are considering military action, whereas Russia has stepped in and said that it will shoot down any missiles aimed at Syria. And then, of course, Donald Trump is tweeting about the situation. He has said that new and smart missiles will be fired at Syria. And then he said that Russia shouldn't be partnering with a gas-killing animal. So you can see the full tweet here. Surprisingly so far, this hasn't caused much of a step down in global markets. But what we have seen is a movement into so-called safe haven assets, gold being an example. So here's a chart showing the gold price over the last 12 months. As you can see, it has risen over the course of 2018 so far as equity prices have come down, but there has been a particular spike over the course of the last week. And that's something that we would expect to continue if investors do become more concerned about global conflict. And lastly, we've been looking at McCarthy Stone and the insights this gives us into the UK housing market. Now, McCarthy Stone is a house builder focusing almost entirely on the retirement markets. And as the UK has an ageing population, you would expect them to be doing quite well. However, they're not, as you can see by this 2-year share price chart here, which is very much a downward sloping line. So why aren't they doing well? Well, the reason is that for a retiree to move into a retirement home, they need to sell their existing property and downsize. However, because the upper end of the UK housing market has slowed quite a lot, partly due to Brexit concerns and partly due to higher rates of stamp duty on more expensive properties, this has meant it's very difficult for retirees to sell their existing homes. Therefore, they haven't been able to do that, and they haven't then been able to move into the new retirement homes. So that's really harmed McCarthy Stone, and according to the company, this is something they would expect to continue for the foreseeable future. So I think that's quite an interesting insight into the state of the UK housing market. Moving on to the week ahead, it is now second quarter reporting season, and we are starting to see more company results coming through. So next week we are looking forward to Johnson & Johnson and United Health Group in the healthcare space. We've then got Goldman Sachs, IBM, BHP Billiton, US Bancorp and ASML. That's it from us. Have a great weekend, and we'll see you next Friday.